Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently someone asked me to look at a couple of companies and I'm going to do that today. So there are two companies out of the ones that you've asked me recently to look at that we're going to look at today in this video. But before I do this, I want to make sure that everyone understands this, okay? Every single company that you see in here is basically companies that I've researched on my own, and I think it kind of suits more like what I'm looking for. What you're looking for, what I'm looking for is of course different, and you have to be careful when you're investing in any of the companies that I own here, because my investment philosophy might be completely different to yours. I might be taking a little bit more risk than I should. That doesn't mean you should take that risk either. So everything we're doing here is just to kind of give you information and entertainment purposes, and then you go away and do your own research and find out exactly why you should invest in these companies. So if I talk about a company and you feel like, this actually looks good, don't just straight away blindly go and basically, initiate a complete position. Just go away and do your research, find out exactly why you should invest in these companies, because there is a reason why I have these companies in this portfolio. Every single one of these companies, I had to do my own research. I have to find out what they do, how they do it, who their customers are, how much the money they generated, the future perspectives of these companies. So please do your own research before you do this. Again, everything we're doing here just to kind of give you information, share my journey with you guys, do it as a bit of entertainment too. Okay, and inshallah, of course, if you're interested in any of these companies, go away, do your research, and find out a bit more information about them before you start investing. So that's just to kind of give you a heads up. Please always do your own research, because I could be wrong. Okay, I'm not saying I'm a guru, I know everything I'm talking about here. Okay, I'm just sharing my journey, and that means I might make mistakes. Okay, now as you can see, the portfolio has been up and down. It's gone down now for the last couple of days, of course, but it's still up about 4 or 5%. So I'm not really too worried about. September is one of those months where if you look at the last 4 years or 3 years, around beginning of basically by the end of September, the markets are down quite a bit, but by the time we get to the end of the year, the markets are up. The general market is basically up 7-8% more than, if not more than that. So you have to think about the long-term plan, and just don't think about just because September is a down month, okay, and your stocks are down quite a lot, doesn't mean basically you should sell and run away or whatever. Because I was up at some point, I look 81,000 and a half basically, okay. But right now I'm 500, but right now look at this, it's down actually about just 79,000 whatever. So please just be careful. Don't listen to the news and don't listen to the noise and just ignore that. Buy quality companies. That's still what I'm doing. I'm sharing a lot of the things that I'm doing here in terms of dividends and some things on buys and sells. I'll share that with you guys soon. But if you want to basically up to date, basically know exactly what I'm buying when I'm selling something, join us on the Discord, because you can get access to all of these things, and you can get access to the Patreon first, and then you can get access to the Discord. Okay, that's where I share a lot of the information, that like anything I buy, anything I sell. And there's a lot of brothers and sisters out there on that basically on the Discord that basically talking about stocks that they're buying, why they're buying it, and just kind of helping each other. So yeah, if you want to join the community, it's absolutely amazing. So please join us, and definitely helps the channel, inshallah. Right, the first company that we're going to talk about today is PPG Industries. This is one of the painting coating kind of company. I used to have this company in my portfolio, but sold it not long ago. As you can see here, a year to date is actually basically up about 3%. For 1 year is up about 15%. So since I sold this company a while back, it's actually done really well. And when you look at the last 5 years, you can see it's up only 19%. Okay, so what I'm going to do is now I'm going to look at the financials of this company. You can see the forward P is only 17 and so on. So we'll look at the financials. But before we do that, if you're interested, again, as always, go to the company's website, find out a bit more information about what they do and so on. Like I said, this company basically makes a lot of products that are used to basically for paintings and coatings and so on. So in the airspace, for example, in just normal buildings and so on, marines, traffic solutions. So they have basically well diversified portfolio of products that they actually use, that they sell. At the same time, They're a worldwide company, so they're not just based in the United States. So just find out a bit more information about what the company does in terms of the business side of it. Now what we're going to do is look at the financials. Like I said, it basically is distribution of paints, coatings and special materials, and then you can see a bit more details on their website. Now is in the material sector, and the name is PPG Industries, and current share price is $130. Now EPS is $5.58, a market cap of $31 billion. So they're not a huge company, they're not a small company either. And when you look at the economic mode, it actually has a narrow economic mode, and beta is actually quite higher than 1. Beta higher than 1, that means basically it is a bit more volatile than the market. Okay, if it was below 1, then of course it is basically not as volatile as the general markets. Now current PE is 23, forward PE we've already seen is about 17. Now when you look at the sector is currently, the material sector is actually right now has a PE of 14, and the S&P 500 is about 25 right now. The 5-year average for this company is about 21, so it seems it's slightly more expensive when you look at the current PE, but based on the forward PE it seems it's slightly, and based on forward PE is actually cheaper right now. Price to free cash flow, we're looking about 25, and the PEG ratio of 1.37. Now this kind of tells me maybe it's fairly valued. Maybe it's one of those companies right now, it's not a buy right now, but you could add it potentially to your watch list and then see how it goes. So based on just the PE side of things. Now let's look at the dividends, and this I think where this company shines. Annual dividend yield of almost 2%. The payout ratio is only 36%. This is important because they're using about basically 36% of their net income to pay us the dividends. So it's actually quite good. They have a room to grow that dividend. Anything about 60 for these type of companies is a bit risky, so you have to be careful. Latest increase was about 4%, 4.8%, 5-year growth rate of 7%, which is quite nice. And they have increased that dividend for 51 years. The annual payout is $2.60, and the dividend safety is 93%, which is highest you can get is 99%. So that's like the JJs and Microsoft and Apple and so on. But this company has 93% safety. So that means they can increase that dividend and without a problem, and that dividend is actually safe. The free cash flow right now is $1.22 billion. The market cap of this company is about $31 billion. So that's not bad at all. And when you look at the free cash flow yield, we're looking at about 4%, and free cash flow margin is about 7%. So which is quite good. So it's basically higher than what we're normally looking for. In terms of profitability, we're looking at a profit margin of 7.3, operating margin of 11%, and return on equity of 19%. Total return in the last 10 years, this company, including dividends, price appreciation, whatever, it's been about 6%, and return on invested capital is about 9%. In terms of revenue growth, we're looking at about 3.86. That is annual compounded annual growth rate in the last 5 years. We're looking at about 3.86%, and current ratio is above 1, which means basically they can cover any current liabilities the company has. Now, growth estimate for the next year is about 12%. Up to that is about 13%, which is very, very healthy for this type of business. So I feel like the company has been sleeping or basically like lazy or whatever in the last few years, and now it's about to grow again. So probably that's why it's gone up quite a bit in the last few months, because the price, basically the analyst expectations moving forward. Now, according to Morningstar, it's about 15% premium right now. So their price target is about $115 per share. According to Simply Wall Street, it's about 28% undervalued. They're saying it should be about $184 per share. Now, in terms of Tip Rank and Seeking Alpha, yeah, those two are very similar. So you can see 162, 160, about 20% also upside, but one is saying is a moderate buy and the other one is just saying a buy. Okay, so that is that company. So it looks to me, I will say, is a kind of moderate buy right now. I would probably wait for a drop, maybe $125 per share, if not below than, if you were interested in the company. You're looking for a material sector. Again, this is one of those companies that has a predictable business. Okay, and the fact that they're actually growing 12 to 13% is really, really important, because I would say this is the type of business that grows about 5, 6, 7, 8%, but not 12, not double digits. Okay. Now, in terms of business side of, in terms of Sharia compliance side of it, 99.7. Okay, 22%, which is slightly high, but 25 and above, that's when I do my cutoff recently. And interest bearing securities, we're looking at about 3.7. Again, when it comes to these things, Zoya uses 12 months, which means basically these things can easily change, especially these two here. So lately I've been using 24 months or 36 months, and I've talked about that in this PDF that I shared with you guys, the Sharia compliant investing ebook. And there are different methods of looking at that rather than just looking at Zoya. So there are different methods of looking at that, so just go and have a look at that if you haven't got it yet. Shares outstanding, we're looking in the billions, so you can see it has been declining over the last 10 years, and that's what you want to see. Absolutely. They're buying back their own shares, they're giving you 2% dividends, and it's a decent company, decent overall. I will say it is a good business. I wanted to buy back this company for a while, but I feel like it hasn't come down to the price that I'm looking for. Like I said, $120 to $125 per share. I'll probably look at it again. The next company we're looking at that you guys have asked me to look at is Illinois Tool Works. This is industrial company. This is probably one of the oldest companies that I know of. They sell all sorts of products that are used in the industrial sector. And if you look at their recent quarter, so this is their earnings report that they reported on the 1st of August 2023. There's a lot of information there. One of the things they talk about is organic revenue growth of 3% basically since for that quarter, which is important. Okay, organic just means basically the company organically growing their business rather than basically through acquisitions or buying other companies and so on. So the revenue is growing. They've got different types. So we talk about the margin, operating margins, and how much basically it's up from where it was last time. They talk about the different sectors, so the total revenue and the operating margins from the automotive side of things. Okay, they also talk about breakdown of segmented performance. Okay, so they have loads of different segments, and they will tell you how much the revenue side of it and how much profit margins, and the fact that how much is grown. It grew from the last quarter and so on. So they're comparing this quarter to this time last year, if you like. Okay, so there's a lot more information, and there's some guidelines as well to check. So there's a lot more information in there. All you need to do is go to their website and you can have a look at that. So let's go back to here. One thing I want to show you is basically year to date where the company's at. It's about 5% up. Okay, for the 1 year, 23%, and for the last 5 years, we're looking at about 64%. And for the last 10 years, if you hold this company for 10 years, right now you'll be up about over 200%. As you can see straight away here, okay, the ratings, it looks like it's all on hold right now. Everyone else thinks maybe it's a little bit expensive. So let's have a look at this. Okay, like I said, it's in the industrial sector. $123, $132 per share right now, EPS of $10, and market cap of $70 billion. So let's call it about $71 billion. So it's not a small company at all. It has a narrow economic moat, and the beta is slightly higher than what we normally look for. Now, the PE, current PE is about 23, forward PE is about 24, the sector is about 20, and the average, the 5-year average PE is about 24. So when you look at where it is now, you would say is actually fairly valued, okay? Or maybe to make money in this type of business, you probably want it to be lower, the 5-year average to be, of course, higher than this, of course. So I think it's right now it's kind of fairly valued, but I would definitely wait until it comes back down. So let's have a look at the rest of financials, and then I'll give you my view of what I think about this company. So in terms of annual dividend, we're looking at about 2.25% right now. The payout ratio of 56%, slightly higher but not too high. Latest increase about 7%, and the 5-year growth rate, the 5-year growth rate of 12%, which is really good. Dividend growth streaks of 51 years. Again, another dividend king. So the first one was a dividend king because they had a 51 or 50, whatever it was. In fact, I think it was 50, right? Oh, 51 as well. So there we go. So both of them are dividend kings. Dividend kings are companies that have increased their dividend 50 plus years. Annual payout $5.60. Dividend safety of 81%. $5.6 billion of market or free cash flow right now, on free cash flow yield of 3.7% and free cash flow margin of 16%, which is really good. Now, profit margin, we're looking at about 19%, operating margin of 25%, return on equity 96%, and total return in the last 10 years about 13%, okay, which is really nice. Total return on invested capital 31%, and revenue growth, compound annual growth rate in the last 5 years, we're looking at about 2%, and growth current ratio, we're looking about slightly higher than 1, which is basically what we're looking for. Now they're expecting the earnings to grow 6% this year and then 3% after that. Okay, I wouldn't expect anything higher than from this type of business. It's been around for a long time. The industrials companies that have been around for a long time and has not diversified well enough, that are still basically growing about 3 to 6%, maybe and 8%, 9%, and so on. Fairly valued according 16% premium right now according to Morningstar. Simply Wall Street saying about 5% discounted right now. And then Tip Rank and Seeking Alpha, again, more or less the same, about 6% upside, about 4% upside. But both of them are saying is to hold right now. And I think I do agree with this. I've not seen this company come down that much for a long time, because at one point I was looking for industrial company before I bought Cummins. And I remember looking at this company for a while, and it's never come back. It's never come down. So there we go. So 99.8 in terms of rate compliance side of it. Interest bearing debt, we're looking at about 11%, and interest bearing securities is about 1.2. You can see they're buying back aggressively when it comes to their shares outstanding, which is really nice to see from for us as investors. So there you have it. Those are the two companies that you guys have asked me. To be honest with you, for this one, I will put it on hold. For this one, I will definitely put on hold as well, and just wait for the prices maybe to come back down at least to 5 to 10%. You might get a chance between now and December. Don't rush. If this is one of the companies that you're really interested, you understand their business model, how they make money, who they basically sell their products to, and so and so, then I will definitely advise you to wait and just wait for until you get a good entrance, inshallah. And again, remember how many times we've seen a stock go up and go up and go up, and you're like, it's never going to come back down. You buy it and then it goes back down. It happened to me quite a lot. And it can happen to all of us, okay? But please always make sure that you're doing your own research. What I'm doing here is sharing my view on my journey with you guys, but you have to do your own research. It's definitely not financial advice. And I'm not saying I'm an expert. I never said to anybody I'm an expert. I know what I'm talking about, okay? I'm just giving you my view of things that I'm doing, things that worked for me, and so on. And just being transparent. Look, every single day I share this with you guys, whether good or bad, whether you like it or not. If this is for you, alhamdulillah, just stay with me. If it's not for you, wallahi, there's no harm basically finding somebody else that can help you, inshallah. Have a wonderful day, and please don't forget to join us on the Patreon account. It really helps the channel. Assalamu Alaikum.